The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 11th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Lines are open, 877-927-6648. If you can't dial in, let those fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside the Tiger's Den, of course, any ping will do. So let's go ahead and get this show started on magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow off about 9 points. 25,097 is the print. S&P is up 4. NASDAQ up 8. Semis are up 8. Trannies up 111. That's 1% to the upside. Spot volatility index is up 2% or 37 cents. Gold is back 750. Silver down 12 cents. That's about 0.75% to the downside. Leading the charge to the upside, it is Chipotle up 23 bucks, 4%. Asperity Inc. is up $15. AutoZone 13 and change. Intuitive Surgical about 13. ABIOmed up about 13. To the downside, it is WellCare Health, not very healthy today, off 3% or 9 buckaroonies. Grubhub down 7% or 6 bucks. Charter Communications off a little over 1.5%. That's almost $6 to the downside. So let's go to our first requester out here. And our first requester, that is Bob Y. Bob wants to go take a look at the silver. He's playing it to the long side using USLV. He's been in and out. So let's go take a look at the high-ho silver out here. Now, here's the issue that you're dealing with, is that silver is trading into the swing point of February the 7th. The low out there is 1563, Bob. Today's low is, what is today's low? Is 1565. That low has not been taken out. If it does get taken out, you would have an A to B equals CD to the downside. So what you're looking for here is watch. So what is Stevie saying? Stevie's saying watch that swing point low from February 7th at $15.63. The A to B equals CD pattern should it unfold. Right now, right now it has not. There's no way for me to say that it's going to occur, but we just simply know the price point to be taken a look at. And the A to B equals CD pattern, your 1-to-1 level, should it occur, would be 1529, although I do not believe that would be the price target. The reason is because the retracement level between the B point and the C point is about 3.382. It's actually 39.82% to be exact out there. Typically, what that would then signal is a expansion of that C to D move. Now, the expansion of 1514, that would be your 1.272. I can see a little hammer candle out here on the trade day of January 22nd. So on any move lower, Bob, you're certainly going to want to watch January 22nd, because you and I, we know that expression. If you're long, you're wrong. And what that means is if there's a close below the low of a hammer candle. So another key support level to be watching would be 1519. We're not there just yet. If we turn on profiles out here from a daily and a weekly standpoint, they're really not of much use to us because price is above both the top and the, well, it was above the top at 1553. So that becomes a possible support area out here. But the daily and the weekly as we speak right now, not really providing you and I with a whole lot of information. Of course, having the price out there, that helps a bit. If I take a look at shorter term for you, let's go take a look. When I say shorter term, what I'm really referring to is the 5-hour, the 2-hour, and the 1-hour time frame charts out here. The 5-hour chart is most interesting because price is now testing the bottom of that profile. And that profile has held the support so far since it formed, which was around 9 o'clock in the morning on February 7th. So we're now on the 11th out here. I would be watching the price point of 15.65 out there. A close below that, that would signal that a change in trend inside of, at least short term, change in trend inside of silver would be underway. So with regard to you playing it to the long side out here, the question is, where do you go ahead and take that next long trade out there? And that one is I think we got to be patient. Since you're playing it both ways, here's Stevie's other chart. We can see how it made its low, price moving lower, Rhodes momentum indicator bottom. Same way up at the top, Rhodes momentum indicator top signal. I don't like the fact that it's below this solid green line out here. That's from the trading day of, well, let me tell you what trading day that is. There's an easy way for me to find that. It's trading day of January the 10th out here. Watch the profile levels. Watch the low, as we had mentioned, February 7th out here. If that gives way, I think you're a ways from your next long trade inside of high-ho silver out there. Okay, hopefully that helps. Let's see, any other questions out here? Mickelson looking good on the charts. He is. He is. How about that tournament out at Pebble Beach, that Pro-Am? For those of you that watched it yesterday and watched it snow, of course, they called it, what do they call it? Hail to the chief out there. But that green was covered with hail. Sure looked like snow to me. I think they're making snowballs out of the hail out there. That was pretty wild. And barely cold out there, but he was on his game this morning, the 4 or 5 shots that he needed to hit out there. Okay, no other requests that we see that, so let's go take a look at what's going on inside the general markets out here. Really look at the shorter term time frames right now just to get a gauge of what's going on so far. So as the market was moving higher this morning into the 9 o'clock time frame, we took a look at silver and the way that it's formed a top, the way that it's formed a bottom. It works this same way. It works this same way on intraday charts. So we take a look at these patterns. And actually at 9 o'clock this morning, very subtle, but the ES Mini confirmed a short-term top. Now what price would then do is go down and test support. Well, you had really 2 support levels out here. Remember, Bob and I took a look at that green solid line on here. It's a red solid line. That's one level. Certainly the TAS market profiles were the first place where you'd look for support, and that was broken at 10 o'clock. By then you say, okay, where's the next place for support? And it was down here at about the 2703. Never hit, but that's a level to be watching today as well. Unless price can get above Stevie's green line at about the 2712 level out here. So short term, we've got something to think about. When we get back from this breakout here, we'll go take a look at what is it that we have to think about. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So our next question comes in from Tom G. Tom writes in, says, Steve, I'm looking to re-enter UGAZ. Traded once this morning. Would like to see what you think about getting back in at 30.54 out here. Well, we're not looking at the UGA. So UGAZ, let's go take a look at the different 3 time frame charts. That's a 3-time long natural gas exchange traded note out here. And so Tom is a shorter term type of a trader out here. And the decisions really should be made off of the natural gas contract. Now, I don't know what's in UGAZ. Is 100% of it, Tom? This is a question I would throw out to you. Is 100% of what's inside there the March contract, or is this multiple contracts out there? If it's multiple contracts, then we need to go take a look at those, each of those, in order to make that determination. But let's just go ahead and begin by taking a look at the March contract for natural gas. And this is the daily time frame chart out here. And what we know at this stage here, Tom, based upon it, is that 262, you're 267 right now, is Stevie's red line. And if price were to get below that level, so if you're asking where support is on a daily time frame, Stevie would throw out the figure of 262. If price were to close below that, there was a gap up this morning, or yesterday, I should say, from the opening. So there is a junior sign of strength, so to speak, out here. But Tom, if price were to get below that, looking to the long side would be, in my opinion, would be the wrong decision out there, because what this would have is a falling price oscillator below zero, and there could be an A to B equals CD to the downside. Let's not entertain that just yet. I do have UGAZ up on my screen. Now, from a trading standpoint, let's do this. Let's come over and take a look at the multiple time frame scenarios out here. Here's the daily time frame over on the very right-hand side. And remember, we talked about 262. Well, also notice, Tom, is that the candle color, the bar color, really, it's not a candle, but the bar color is turned orange. What that means to both you and I is there is a new profile that on a daily basis that is attempting to form. So to a certain extent, I would wait for that would be tonight or tomorrow when that could form, therefore providing you with some newer support and resistance levels out here. But prices pulling back in to that gap. That may be one spot for you to look at. The low of that gap is 265. You're 2.62 out here. We can also look at now there's a 60-minute time frame chart. You see that price is below the bottom of that profile. So short term, that says, well, maybe it goes back and it tests or fills that gap out there. But if it fills that gap, that's a bad scene because you'll be back below Stevie's red line out there. What else can we look at? If I take a look at a 30-minute time frame chart and we look at some of the support and resistance levels, those TDST areas out here, we can see how price had pulled back to this area at 10 o'clock. And that may have been the point when you traded it to the upside. And so it says that the candle session that represents the price low of 2.660 out there, that is a support level. Now, if price were to close below that, that would be a key level of support. It was already tested once and there was a bounce off it. That would be a key level that price would break through, and that would say, don't be looking for another UGAZ trade at the moment, not until you see some other pattern that identifies a bottom. So that's a 30-minute time frame chart. I'm not seeing anything on this set of charts for a 60, 120, 5-hour chart that says you should really fire away as we speak right now. So I hope that helps you out, Tom. Thanks for writing in. That's about the best information that I can give you. It's the only information I can give you in taking a look at all the charts. Okay, so no other questions out there. We were taking a look at the ES Mini earlier before we went to breakout here. We were looking at just as a quick refresher, we were looking at the 30-minute chart out here. And by the way, its key support level to be watching. There's also a little red horizontal line. This is on a 30-minute basis now we're referring to, is 27.03 and a quarter. So if price were to break below that, then price should continue to fall down to where? Well, we're going to move off of, skip to the Lou My Darley, but we're going to go ahead and move off of the 30-minute chart and just go to the daily chart, because the daily chart is really where it's all at least for you and I as we speak right now. Because a daily time frame chart, you can see right now that price is above Stevie's green line. That number is 26.95. Price is above the bottom of its TAS market profile. That's 26.83. You're above both of those. What's the meaning? The meaning is bullish. However, cautiously so. Cautiously so, because what price was unable to do today is really to move above with any kind of conviction the center line of its box, which is not in the center. It's closer to the top of the profile. The price area where sellers are lined up inside the ES Mini is the 27.16 to 27.37 area. So what are you looking at? 27.16 to 37, you're looking at about a 20-point, 19-point range out there. That is the range to the upside. We know that support is held. How do we know that? It was tested on Thursday. It was tested on Friday. So far today, it hasn't been tested, but you are trading above the high from Friday. And so that, too, is short-term bullish, but really in a tight range out here. If price were to close below, so back to that 30-minute time frame chart, where is it that price could move to? Well, we would have to say Stevie's green line, 26.95. That is about 13 points away from where we're trading right now. So fairly tight range out here with regard to the ES Mini. It's not much different with regard to the other, or I don't think it's much different with regard to the other equity futures contracts. But we should take a look at the Dow, because it is the one that is trading down the most, so to speak, down 0.1%, trading down 32 points. Let's look at its 30-minute time frame. Now, it provided you and I with a signal at 9 o'clock. There was follow-through at 9:30 when price went ahead and closed below Stevie's green line out there. Not to be confused with Stevie's green egg and ham, that is. But what we can see is price then gave a signal that, okay, on a 30-minute basis, price is going to go test support. Where was support? Support was at about 25,138. Price broke through that. Where was price going to head to next? That solid red line. We just took a look at that with regard to natural gas on the 30-minute. This is a 30-minute chart. We took a look at it someplace else. But right now, the level to be watching inside the Dow equity futures contract is going to be 25,036. on a closing basis on a 30-minute time frame. That level's been tested 1, 2, 3, 4 times so far today. Maybe the 5th time is a charm. If there's a close below that on a 30-minute time frame out here, then that says lower price. Lower price to where? Well, really the same deal. The deal? What do you mean the deal? Deal or no deal? Well, this would be the deal. The deal would be, and we're going to pay attention to it, would be 24,985. 24,985. We're only at 25,048. So that, 50 points can happen in a heartbeat. But it would be the close below that that would then generate the signal. What signal is that, Steve-O? Well, there would be several signals. So excellent question out here. Number one signal, you can see on the chart here, you've got a 7th wave move. That's letter G. Oftentimes at letter G, when Stevie Wonder sings his tunes, that's where he has the biggest changes in pitch or trend. We have to watch Stevie's green line out here today and the close. 24,985 out there. Key level of support. You close below that, it could be Jane Curtains to the downside. We'll be right back. The universe provides us with opportunities all the time, and I was no different. In 2006, I invested $2,500 in a 2-day master trader course taught by Tom O'Brien, then ranked as the #1 market timer for gold. The fact is, if you want to be the best, you must learn from the best. Hi, I'm Steve Rhodes, author of Mastering Probability and the Market Timer of the Year for 2018. To celebrate this accomplishment, TFNN.com is offering you a free 2-week subscription to my award-winning newsletter service, and there's no charge to you until day 15 unless you cancel sooner. That's right, we're waiving the normal upfront deposit, and this offer is available to anyone and everyone, even if you've tried Mastering Probability before. Sign up now, and I'll teach you the tool that identified the bottom in the Dow on January 26th, the morning that led to the largest daily point gain in history. This offer will expire on February 10th, so go to the homepage of TFNN.com now and click on Mastering Probability.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Now, remember, we were taking a look before we went to break. We were taking a look at the Dow Equity Futures contract, and we were specifically taking a look at Stevie's green line out there. Now, if there were a close below that, that would suggest that we would see lower price. However, we've got more. because there's another key level of support that must be broken in order to say, okay, we're starting to head down. Down to where? Well, first target would be 23,790. 24,868, though, is the number that must be busted through. That's the bottom of its daily profile, which held as support when it was tested on Friday. In fact, all of the bottoms of those profile levels held as support. It was another test, or it was a test for the ES Mini. On Friday, it held. It actually began forming on Thursday. It doesn't look like that on these charts because these charts here are just simply the normal March contracts, and Stevie has a special contract tool up his sleeve where we saw that there was a new profile forming, and we got an early indication as to where those data points were. And actually, Thursday's test was a test of that level. So it's a key area of support across the board for each of the equity futures contracts. If you're watching us on Tiger TV or the archive, all you have to do is look at my data boxes for each of those futures contracts, and you've got the daily top, center, and bottom. That's in the blue, or those are the blue horizontal lines, or the blue font color inside those data boxes. And then you have the weekly, which are the green. The top is the top, obviously, the center, the bottom is the bottom. You didn't need me to explain that to you, but I just did. And those would be the weekly areas out here. The weekly, in this case, I don't have a signal of a new weekly profile that is forming, but I continue to look for one because there really are guidelines to assist us in identifying, number one, where's the next resistance level? And if it's taken out, is that bullish or bearish? Of course, every resistance level that's taken out is somewhat bullish. Some are more bullish than the others, such as would be the case inside the ES Mini. Because of the 4 boxes that are out there, it's the ES Minis that is the one that has the most bearish look to it, a grizzly bear kind of look to it. Just kidding about the grizzly bear, but a bearish tone to it because the center line at 27.15 is closer to the top at 27.37 than it is to the bottom. So key levels of support to be watching for, that if a close takes place below that, sets off a fairly decent, or what should be a fairly decent move to the downside. What happens if those areas are not taken out? Excellent question. Well, you know, let's just go take a look at, because I know not everybody's using the equity futures contracts out here, but let's just start from scratch. Scratch is usually pretty good. To start from scratch, it means I've got to add a couple of tools, and one of those tools we'll go ahead and add is that old lightning bolt pattern, that A to B equals CD pattern out here. And so, okay, it's added. So here's what we know. What we know is, in essence, if we pull this, by the way, this is for the Dow. So let's stay with the Dow out here. So what we know is that back in December 26, that completed a Gartley buy pattern. We know that. How do we know that? Well, a Gartley pattern, here, if we just simply take a look at this chart, and we just go back to the 2016 level inside the Dow, where it had that extraordinary run from 15,005 and change, really all the way up to the high out here of 26,000. Okay, big, huge move. The first, actually, there's been a couple of Gartley patterns out here that have formed, but we're going to pay attention to the most recent one. And the recent one here had that, you got to hold down the right key for those tools to work. So here's your Gartley buy pattern that forms out here. And you can see that it was a 1 to 1.618, A to B equals CD. Now, you don't need me. You've already heard this probably ad nauseum, and I don't want to make you ad nauseum, but I just really want to say, hey, we've got to take a look at what's the upside potential out here, right? So we know where we know where support and resistance is for the Dow. We're going to pay attention to the equity futures contracts for that. Here's our Gartley buy pattern. Now, we know there was the 1.6, not because price stopped there, per se. We know that that was the completed pattern because that was the first time we got a bullish reversal candle out here. Now, all Gartley patterns have 5 potential different outcomes. Let's go measure and let's go see in the Dow which outcomes we have attained so far. And we do that by just simply going from what we use as the A point, which was October 3rd, all the way down to the low on December 26th out there. That was our D point. And so I said 5 outcomes. I know maybe you're scribbling this down on a pad of paper out there. Outcome number 1, it is the 0.382 retracement of that entire move. Outcome number 2, It's the 0.618 retracement of that entire move. Outcome number 4 is the 0.786 retracement of that move. Outcome number 5 is the 100% move of a move, get you back to the all-time highs, get you into that 26,951 area. Is that a possibility that that is what is transpiring here? Well, first you got to get to the next level. Here's what we know about price currently inside the Dow. If the support levels that you and I took a look at, and specifically there, it was in the equity futures contracts, because that has the most reliable data of support for you and I. That way, it's just a mathematics decision-making process. It's clear, the numbers are there, you close below it, the message is very simple until you get some other information. Well, the message here is relatively simple. If you don't take out the lows, price is going to go to where? When you look at this chart, even if you're listening on the radio, if I tell you, if I share with you, I'm not telling you anything, that sounds kind of nasty, but if I were to share with you that price cruised above the 0.618 retracement level of that entire move, did so with a gap to the upside. Gaps are your friends. You know they're signs of strength. Moves higher. So far, we've pulled back and just simply tested 24,950. So if the resistance levels that you and I have taken a look at on those daily equity futures contracts get taken out, for all intents and purposes right now, you can just simply say that's going to be the high of February 6th, just a few days ago inside the Dow, 25,439. If that gets taken out, where's price headed to? You're exactly right. You are a better chart reader than even I am. You already knew the answer. You were saying, Steve-O, 25,831, or really 830.60, is where price would head to. And if we don't see a bearish reversal candle form as price gets up to those areas, it will keep cruising higher. Now, is that a possibility? It most certainly is. It most certainly is. You know how we take a look at, and I've got to open my mind up to that. You know, we have some bearish patterns that are certainly out here. We have some Gartley sell patterns that are in place. But if the high gets taken out, if the February 6th high, for example, in the Dow gets taken out, then I've got to say to myself, I don't have to, but I will say to myself, well, I'll say it to myself when I can say it, share it with you. I say, tell, you know what I mean out there. Where is it? Where is it? I'm just looking for, I know I should do a little pre-planning, right? So I don't have to have these critical pauses out here. Nonetheless, you're trying to figure out what is it Steve was going to show me, right? I thought it was kind of like right here. I'll be a son of a gun. Oh, it is right here. Really, it's kind of like that. It's kind of like it's right in front of you and you just don't see it. Get to it already, Steve-O. Slideshow from current slide. We're gonna have to discuss this when we get back from this break out here. Simply put. But when's the next significant high come in? Seasonally speaking. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So before we went to break, we were just put the seasonal cycle chart up on our screen out here, and the typical pattern. And when you take a look at this, the perspective that I want you to have is not the size of the moves, but more so the timing aspect of it. And the timing aspect of it here takes the last 86 years and averages out each day. So it really tries to keep the calendar specific time frames out here, and then all that stuff is added up, divided by 86 years by day, and that's how I actually get these moves out here. And I've got some dates. The dates we simply use as time targets, general targets. Sometimes it happens to the day. When it happens to the day, I pinch myself. When it doesn't happen to the day, I don't pinch myself. But I still pay attention to being somewhere in proximity or close to those dates for some type of potential turn. Case in point, typically we see a pullback into the end of January. It's now February 11th. Oftentimes after that pullback, we see the market move higher for a few days, like into February 3rd, then a slight pullback. Well, is it a coincidence out here that that's the Dow, by the way, that we were looking at, that the high came in basically on February the 5th. February the 5th or 6th versus the 3rd. And then we've seen a slight pullback. Let me put that chart back on my screen. I don't want you to think that I'm playing some kind of, hocus pocus out here. No, these dates have been written here for those of you that have copied this chart, which many of you have, certainly inside the Tiger's Den. You can go back and take a look at your charts. Those dates have been there for, well over a year out here. So there is this slight pullback, which we've seen. And price did pull back and test support, and it's held so far. So just making me say something to think about. Then you see a run-up into about the 19th of February, bit of a pullback. Then for a couple of weeks, or a good week, I should say, really 10 days or so, into early March, and then boom, moves higher. So if we don't see, again, not looking at the magnitude, just kind of like some turn-style dates out here, if we get through the early part of March without any kind of major correction out here, then those other outcomes of the Dow pattern really come into play out here. And again, those patterns being the 0.786, 25,830, the 100% move of a move, 26,951, and then, as Mr. Bill asked, what is the fifth outcome? Now, the fifth outcome is that this turns into a new A to B equals CD pattern, that the actual Gartley buy was a new A to B equals CD pattern. Now, to make it easier, Mr. Bill, so that we see this, don't fall off your chair. Don't fall off your chair. But the only A to B equals CD, I'm going to put this on a weekly time frame out here. We're going to go ahead and get rid of those retracements. We can put those in. If I were to ask you, that's right, you, to draw an A to B equals CD pattern utilizing this weekly time frame, what would you do? Well, if you was me, I was you. Here's what I would do. I would go ahead and I would choose those lows. I'd probably go ahead and choose the low out here from the week of February 8th. That would become my A point out there. And my B point is going to be that high from October. And then my C point is going to be December's low. And so the fifth outcome, we take out 26,951, as you will see by taking a look at this, is 33,161. The reality is if we take out 26,952, and we're just in the consolidation as we speak right now, but if we do take it out, and price continues on this trajectory, when I say trajectory, look at the trajectory on a weekly basis on that C to D leg. Look how far to the left of the line, the diagonal line, that it is. This would be telling us 36,275. I'm not making that prognostication or that projection at this stage here because we have to take things one step at a time. But Mr. Bill, who asked for everybody in the listening audience, outcome number 5 of any kind of Gartley buy or sell was the mere fact that that D point of that A to B equals CD to the downside, in this case here, because this was a buy, turned into the C point of the A to B equals CD to the upside. Now, if that's not confusing to you, then, hey, kudos on my part. And if it is, just re-listen to it. Just rewind it, listen to it. And I just showed it to you, so I just shared it with you. And remember, we took a look at an A to B equals CD down on the daily basis. That D point becomes the C point of a new pattern out there. Perfectly clear for some, but sometimes it's not always perfectly clear. I sometimes listen to what I say and confuse myself, but that would be outcome number 5, and that is of the Dow. And I would say if we don't see the bottom of those profiles get taken out, yeah, the market can continue to move higher. Now, what we certainly know about the market, what we certainly know about, doesn't matter if that page here was kind of irrelevant. What we certainly know about the market is, well, this was not the tab I was looking for, but as long as I hit this tab, we might as well just stay here and just kind of discuss this for a moment, right? Because if I were to ask you, I guess I'm asking you, if I were to ask you, of all the things that you know, what do you think is the most important aspect of understanding where an instrument is headed to? What do you think? Somebody were to ask you, hey, what is it that gives fuel to an instrument out there? What would it be? And you might say, well, hey, it's pretty simple. It's buyers, right? It's like Tom's expression, if you go more buyers and sellers. There you go, Jay. More buyers and sellers. And that is exactly right. But by more buyers, truly more buyers, what you and I want to do is gauge the worldwide market. Is the worldwide market buying the instrument that we're taking a look at? Just so happens I clicked on the Dow page. Wasn't where I was going, but we're there right now. And if we take a look at what's going on, because this is where the real energy comes from. It's not just you and I. It's our ancestors that are, if you know what I mean, that are somewhere over in Europe or wherever your ancestors might be. If you have them overseas, if you follow your family lineage. But the bottom line is what are traders in pounds, so in the UK, in yen, in euros, and in dollars out here. At some point in time, we'll probably be able to add the Chinese yuan, but now is really not the time. But if you take a look at, just picture yourself right now. You're sitting over in the UK. You guys that they voted for Brexit. Now they're saying, I know we voted for it, but we don't really like that outcome. Let's vote again. I mean, isn't that really what they're doing? You got that kind of confusion out there. Let's just forget the whole idea of a political system. I'm not being political here, but you can see that the traders over there are saying, I like having my money parked in the Dow. The Dow parked in Great British pounds is doing nicely. In fact, if you take a look at this yearly chart that we've got, this yearly chart, it hardly budged last year. Nice movement up and down. Hey, take a look at the Dow and euros. They're saying the same kind of thing. They're saying, the heck with those yellow vest guys and gals and everybody else. Let's park our money over in the U.S. This is really the key. Where is money flowing? What's that guy's name from, who was that, Tom Cruise? Show me the money. I forget his name right now, but you know what I mean. This chart here is showing you the money. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or Primal for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Whoa, 2 minutes to go. Hey, let me do this here. So this is the chart that I was actually going after, and this shows the consolidation that the Dow is still in. Priced in U.S. dollars. That's the left-hand panel of my screen. The consolidation is between 26.6 and 23.3. If we take a look at that same consolidation, I use the same high on the Dow priced in euros. That would be 21.412. That's that little yellow dashed line out there. You can see how we're trading. The Dow itself is trading, priced in euros, is trading above that. So if you're ever wondering at this stage here, who are the dipster buyers? Maybe they're not in U.S. dollars, but they certainly are over in the euro and inside the pound sterling. The question that came in here, let's go try to answer this. Whoops, where did it go? Came in from Phil. Phil is asking, Qualcomm has just reported, it seems to have found a low in the 50 area, which has been a key level going back several years. What do you think is a risk reward for a long play here? So if we take a look at Qualcomm, let's put it up on Stevie's white charts out here. And the reward, here's what I would be shooting for out here. And this is not taking a look at profiles. I'll do that for you in a moment. But the price target to shoot for to the upside to do your risk reward is 57.40. The downside wise, you need to be placed underneath the low. It looks like of January 31st out here. Let's take a look at profiles, see if they provide you with anything, Phil. So in the case of Qualcomm, resistance is at 52.63. That's the daily profile. Price is below the monthly. Price is below the weekly bottom of their boxes, so they're not being of assistance to you at this stage, although 51.35 would be a key level on a monthly basis to close back above. So this kind of, what do we see out here? We're not seeing a sign of strength off of the bottom. You're just not, you're not seeing really a capitulation low per se. And with price sitting right here at its point of control on a daily basis of 50.87, you got to be careful. I'd rather this close well above that, like it was trading intraday, to get you the 52.63 area. So, Phil, I hope that helps you out. Thanks for writing in. Folks, stay tuned. Your favorite polar bear, David White. He's up next. After that, Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.